Okay, welcome to another Trendrisk video. In this video we will present some techniques how to use Trendrisk in intraday using 5 minutes chart. Here you see a 5-minute chart. The bands are the 5 minutes tip up and tip down. The gray upper and lower bands are stop, tip down and stop, tip up. These are used to place stop in Trendrisk. It's always better to have maybe 5 or 6 ticks below the stop, tip down in order to avoid to be wiped out. So here we had a small downtrend coming down for 149, and here is the first possibility. Even though the trend was down on the 5, everything else was up. So you might expect that the uptrend could return. And here you can see you have a tested tip down and a second tested tip down. The bands are defining relative position, and so here you have a very low risk entry points with the stops maybe below 148. This was 148.10, so you might even get at 148.13, 15. And what you can see here, if you see on the RSI, is testing low again, is testing tip down. It does not break tip down. Actually the low are a tip down, and you have a loss of momentum. This is divergence on the RSI, and you have a nice up move, and you could have closed the position around here even at the first touch, because you are working for a small move, and you're not for the trend. Here there is a second position that could have been taken, even though it did not really touch tip down. You see the trend as becoming up, so everything now is in synchrony with the other time frame, so there's much more power in this move. You're expecting this because all the other time frame tells you it's going up, and here you could have entered and maybe got out of the first target here, or if you are in an uptrend and you're a little bit more, you could have got out here. It depends on your position. And third, here is a second trade. This is a counter trend trade. It's the same as this one. You have a up move, going back, retrace, coming back. You see the convergence of hourly tip up, hourly 5 minutes tip up. The stop hourly tip up was around 149 at that time, and a big resistance. So here you also see on the RSI again big divergence, so loss of momentum, is retesting the high on a relative basis. Remember, a break above tip ups means bullish, very bullish psychology. So here it's a relative safe shorts. You put stop in order that if it was a breakout, you don't get stop out too badly. So you could have put the stop above the high, or even above stop tip up at 149.10, because if the move is wrong, it's wrong. So it's stupid to lose anyway 10 ticks, and you should have gotten out here, first touch or second touch of tip down, because you've done all the band width, which was around 50 ticks, which is quite big move, if you're working on intraday. And you can see here tip down has acted again as support, so you could have also open here, even though you might don't want to do a trade one after the other, but this honestly depends on you. During the night, because the liquidity gets out of the market and there are not major banks, you will see that the 5 minutes tip up and tip down, and even the 1 minute tip up and tip down, can be used as really good entrance points for scalping. If you're using 1 minute, you're getting in for 5 to 10 ticks. If you're using the 5 minutes, you are working on the trend risk bandwidth. If you want to know the bandwidth, how much is, you can go here and select indicators and just select trend risk bandwidth, and immediately you will see that, for example, now the difference between tip up and tip down is 39 pips. So if you're walking, you're buying at one of the level, you can taking out the spread, consider that you can get a trade of 30 pips. This is just an example how you can use trend risk in intraday using a smaller time frame like 5 minutes.